Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Let's just hit the record and let's get started.
Recording in progress.
Welcome everyone. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you guys all for joining. It is 11 a.m. Eastern and it is January 20th, 2025. Thank you guys for joining. I appreciate everyone here. I hope you guys had a great weekend and you're ready to get back into these markets. This is a big week this week, guys, so I'm super excited. We're officially going to start to introduce stock market tomorrow because today, as you guys know, that the US stock market is closed today due to a federal holiday. It is the Martin Luther King holiday, and the stock markets are closed today. And we also have Trump inauguration in about an hour, around noon. He will get inaugurated. The markets might have some volatility at that time, so just please be careful while you're trading, if you are going to be trading, if you're in any trades during that time or the rest of the afternoon. Okay, guys, so just keep that in mind, that the markets could be volatile with you know, whatever he says. So just trade careful, risk management in mind. Okay. Plan for today is we're going to get started breaking down this week's news, earnings. We'll talk about what we have going forward, and then we'll get to the charts and we'll actually do maybe a nice analysis on gold and one US index. We'll look at maybe NASDAQ, we'll look at US 30 or the S&P 500, or we can do gold and crude oil. It doesn't matter, okay? And before we get to the gold, okay, and then also I'll talk about this where we did a top-down analysis from our London sessions, and I've left all of the zones and the points of interest, and we can see now while we're backtesting how the market of gold reacted at these levels. So where we kind of wrote down a double second bottom, it did in fact come down and create the second bottom. Did it tap exactly right into that green box? It's not always going to do that from time to time, so you still got to understand what's going on. It came down there, picked up the liquidity, and closed above a critical purple line and a yellow line. So I will go more into explaining all of this in more in depth, and what we can do is we can continue to move these zones into the future where it's trading at now. It's no longer supply. Now this zone above 2700 is actually maybe a demand zone for gold going forward. So we'll continue to do that, and maybe we'll start with a brand new charting for the week and get started. Okay, guys? With that being said, I just want to thank everybody for joining. How was everyone's weekend? My weekend was crazy and wild. There was a lot going on in sports, football. If you guys watch football, some crazy games. Yesterday's Bills game against the Ravens, that game was unbelievable. Andrews, tight end on Baltimore, dropping that 2-point convert to tie up the game with just like a minute left. That was unbelievable. So guys, next week we got the conference championships. We got Kansas City, Buffalo Bills, and Detroit was a big loss. I cannot believe that. Washington going and beating Detroit in Detroit. That was unbelievable. UFC was on this weekend, and now you guys are here for the market. So let's check out what's going on in the markets. Forex Factory, okay, so just, I know that you guys have done this probably already. You guys have gone through the week, but I'll just help you guys out and give a little bit additional analysis. But Monday, January 20th, this is today's news. This is the London market. Anything before 3 a.m. is pre-London, 3 a.m. is London market open. You have the World Economic Forum annual meetings all This is day one. This will be going through the entire week over here. This is the U.S. bank holiday that I was just talking about. So it's January 20th. It's Martin Luther King Day. So the stock market is closed, but all other markets are open. You can see that you guys are probably trading gold and crude oil and NASDAQ and things like that. But the individual securities like MicroStrategy or Apple or Google or Amazon, AMD, those are closed right now for trading. Okay. And then right here, see 12 p.m., less than 1 hour, USD, red folder, high impact. President Trump speaks. This is his inauguration. You guys probably have it on the TV in the background. Maybe I do. I have it over here, the inauguration of Donald Trump. Everyone's getting in, settling in with the Bidens and all of that. So who knows what he's going to say? The guy, he says whatever he says. So the markets may react with whatever he's saying. Just be prepared to expect some type of volatility. Okay, maybe there isn't, maybe there is, but it's good to just be aware when we have a big red folder, especially when Trump is speaking. Okay, because he can move the markets with whatever he says. And then so let's continue moving forward. Tomorrow, okay, so tomorrow then official stock markets open up for business and we resume normal trading. But if you are going to trade live London, pre-market London, there is some British news, some GBP news over here. Red folder, their unemployment rates as well, claimant count change. And then we start to trickle in and move into pre-New York. We get into New York and 8:30 a.m., that's our North American block here in Canada and the US. This is from where we see most red folders around this time. And you can see tomorrow it's all Canadian news. So we have our Canadian CPI, so consumer inflation month over month. We have our median CPI year over year. So this is we're not just looking at the previous month. Now we're looking at how inflation is since it's last year, so year over year. Then we have trimmed, common, and core, all Canadian news tomorrow. Our Canadian dollar, our loonie, is not doing really well against the American dollar. It's less than 70 cents, 69, 68. It's kind of just consolidating around there. It needs to gain a little bit of ground, but it could continue to sell off, you know. So I live in Canada, so I follow this every single day. I don't necessarily scalp the U.S. Canadian dollar, USD CAD, but I do watch it for long positions, for investment opportunities. If you guys are from North America, especially Canada, you guys probably remember years back when it was trading at parity or just about. That was a good opportunity to maybe look for a long position. So I do look at opportunities like that. So but you can do that with your own local currency too, because you live in your country. You maybe understand your own economy. You can go outside and see how everything is doing, so you can see firsthand. It's kind of like insider trading. You can see right away how it is. Okay, so that's tomorrow. Let's go into Wednesday. Wednesday's midweek. Do we have anything big midweek? So it's day 3 of our World Economic Forum annual meetings. Not too busy in the London session. Then we start to move into North America again. Some Canadian news, some US news, but I don't see any red folders. So Wednesday might just be a midweek day. Could be a consolidating day. It could be a continuing trending day. It could be a reversal day. Okay. So that's how we gotta continue to watch how the markets are moving today and tomorrow leading into Wednesday. Then finally we get into Thursday. There's a little bit more news in the market. Not much going on in Europe. It starts to move over in our North American block over here, and then we do have some continuation Canadian red folder news, our core retail sales, and then our unemployment claims in the US. Red folder, this is our weekly unemployment claims. So I can see previous last week, the unemployment claims numbers in US last week were 217,000, and they're forecasting 220,000. So they're forecasting a slight increase in unemployment of 3,000 individuals who are applying for unemployment. We'll see the actual number. Will this number be around 220, 218? Then there might not be a significant change in the unemployment. But if this is a bigger number, like let's say, for example, it's 250,000, then it's 30,000 more individuals above their forecast are applying for unemployment. Okay, so that would be a much bigger number. And then the markets, the US dollar, could definitely move and pivot with those numbers. What if this number is below? What if it's 200,000 or 190,000? Then what is that saying since last week to this week with unemployment claims? That means that less individuals are applying for unemployment, and that's good week over week for the economy. The less individuals we have applying for unemployment, they're finding more work, and they're helping the economy by working and things like that, okay? But these are weekly. And you guys know that we have our NFP, our non-farm payroll, traditionally the first Friday of every single month. And then that's an entire month's, where we're looking back to the entire month, okay? So these are just weekly unemployment claims. But we still have to pay attention to these, okay? And then we move into Wall Street. Market opens 9:30. Then we get into some 10 a.m. news. We got consumer confidence report, natural gas storage, crude oil inventories. If you're a crude trader, I would religiously be looking at these folders, know exactly when they're released every single week, and pay attention to these crude oil inventories and mark up the numbers week over week. And so you can start to see this directly impacts the supply and demand of crude oil, exactly what you guys are trading. So it's good to know the inventories, okay? Because the inventories control supply and demand. So it's good to know this stuff. Don't overlook these folders if you are a crude oil trader. It will just make you that much better of a trader and investor and make you understand your levels even more, okay? So very important. If you are a crude trader, make sure you understand the oil inventories. Then we move into our Australia, New Zealand, Tokyo sessions. I don't particularly trade these sessions too much, but maybe you guys do where you are around the world again, and you guys have your own folders. You guys have low impact folders. You guys have medium impact folders, and you guys also have high risk, high impact folders, okay? And then you guys know 8 p.m. Eastern, the futures market opens up, and then we got our Asian session and the cycle continues. Tokyo futures move into Europe, and Europe moves into North America. Markets close at 4 p.m. We got after hours trading, and we repeat this cycle Monday to Friday. Okay, and then to close off the week, Friday. Look at Friday this week. Okay, just by looking at it, I see a lot of red folders. Okay, so when I see a lot of red folders, first thing that comes to my mind is volatility, and second thing that comes to my mind is it's a Friday. Okay, so you got a lot of red folders on a Friday. So this is a day where you have to really trade careful. Like, listen to what I'm saying and pay attention. If you've done really well going into this Friday, then maybe scale back a little bit, because you don't want to do any unnecessary mistakes in all of this madness over here, and maybe give back all of your profits for the week. Do something silly over here where you're gonna revenge trade, and then maybe you're gonna give away all your profits. Now you're going into the weekend, and then you got to think about that, and then you got to start next week Monday again. Who knows what could happen? Okay, guys. So I know I've done this before, and you've done this before, where you're having a great week, and then you come into a Friday, you want to make a little bit extra money because you want to go into the weekend and you want to celebrate, and then you do some silly things. You start taking 1 loss, 2 loss, 3 loss, then you start giving back your profits, and then you start revenge trading, you start leveraging a little bit, and before you know it, you've created a disaster, and now you're going into the weekend thinking about that. And then you got to think all weekend, I was up money, I gave it all back, I'm in drawdown, what did I just do? I just blew up a prop firm account, I just lost a phase, I just lost all my profits. All of these things, you know, those emotions that run through our heads as traders. So the way how to navigate yourself around this right now, listen to what I'm saying. If you're doing really well going into this Friday, then tell yourself, how much are you willing to risk losing on this day, and you're still going to be happy at the end of the week? So for example, if I made 3% going into this Friday, and I still want to trade the Friday, then do I risk my entire 3% that I made this week? Probably not, because then I'm potentially risking giving it all away and maybe more if I continue to trade. So out of that 3%, maybe I'm happy with 0.5%. If I do give that away to the markets, then I'm done trading for Friday, but I still end the week up 2.5%. Do you guys understand what I'm saying? This is where you take your trading from the beginner level to a little bit more advanced, and then hopefully we're going to get you to that intermediate level where you guys, this is going to become just routine. It's going to become routine, and I don't even need to remind you guys that it's a Friday with a lot of red folders. You guys will just see it and understand exactly how I've learned it, okay? But going over, you have Bank of Japan press conference, okay? It's tentative. They don't normally release what time they release the red folders. So if you're trading the Japanese yen, just be careful at this time, okay? Anytime on Friday. Normally it's traditionally released during the Tokyo session hours, okay? Anytime after 8, 9, 10 p.m. Eastern. We get into London. London is a very volatile day. Like you've seen the previous days, there wasn't much going on in London. Now you start to see 3:15 a.m. Eastern, EUR, Euro. So it will directly impact the Euro. The Euro. We have our French flash manufacturing. We have our French flash services. Okay, so France will release their numbers at 3:15. 15 minutes later at 3:30, you have your German numbers coming out now. So we got our German flash manufacturing and our German flash services. 30 minutes later at 4 a.m., we have our European flash manufacturing, flash services. This is day 5 of our World Economic Forum annual meetings wrapping up this week. And then we start to move into 4:30 a.m. Eastern. Then we got our British red folders, our flash manufacturing, flash services. So you can see we're going through some large nations. We're getting our numbers coming from France, from Germany, from UK. So these are the biggest financial markets in Europe, also the Swiss markets. But these are pretty much your large financial markets, all releasing their numbers. You can see 15, 30 minutes back to back. So you could imagine the volatility in there, okay? And then kind of the market takes a little breather, and then we start to move into North American session. Okay, we don't have too much 8:30 news in this block, but then it starts at 9:45. So you guys know Friday 9:30s Wall Street market opens up. 15 minutes later, we have our US red folders, and it's our flash manufacturing and our flash services. So every big nation is reporting on Friday the flash numbers, okay? And then 10 a.m. we get into existing home sales and our University of Michigan consumer sentiment reports and our inflation expectations. And then that's Friday, okay? And then that will wrap up the week, and then we continue moving into next week, okay? Any questions on this week's news? Do you guys understand the bigger days to concentrate on? Obviously this Friday. Okay, just continuing with earnings now. Okay, let's not just stop there. Let's go to earnings. So let's look at our calendar forward forecast. Today is Monday. You can see there's nothing before the open, nothing after close. Why? Because the stock market is closed for the Martin Luther King holiday. Tomorrow, things will start to pick up. Tuesday, we have 17 corporations reporting earnings. Pre-market, we have 19 after hours. Wednesday, we got 20 pre-market, 31 after hours. Thursday, we have 30 corporations reporting pre-market and 24 after hours. Then it slows down. On Friday, we got 10 pre-market and then 0 after hours close for the weekend. Now what we can do is we can go directly right into these days and see which corporations are reporting. Are they the big household names? Are they names that we're specifically trading? Are they in the indices we're trading? Just let's see what's going on. So Tuesday morning before the open, we do have some big names that we should be familiar with. Charles Schwab Corporation, okay, one of the biggest financial institutions in the United States, will be reporting tomorrow morning at 7:30 a.m. So if you're trading the finance sector, if you're trading this individual corporation, if you're buying shares of the company or you're trading options, I would hope that you would be concerned about the earnings per share and the revenue and forward guidance and listening to what what is going on with this company. We also have 3M over here. Okay, so 3M is a large corporation as well. It's traded in the indices that you guys trade. So they report at 6:30 a.m. Eastern. And then we start to get into more of the smaller names, KeyCorp, DR Horton, Fifth Third Bancorp. You can see these are the smaller regional financial banks. But I would be more concerned with these bigger names, okay? And then moving into our after hours. Okay, now we're talking. Are you guys familiar with this? Netflix. Hopefully all of you guys are. How has Netflix been doing? So you remember the last quarter, what was the CEO saying in the guidance and everything? What was he talking about? Subscriptions. They're charging premium prices. Like, what has been going on? Have you guys been following Netflix? Have you guys been following the price of Netflix lately? Has it gone down? Is it kind of consolidating? Is it going up? All of these things, guys. So Netflix on Tuesday after hours, we'll be reporting at 4 p.m. So as soon as Wall Street closes, you're going to get Netflix reporting. And if you do trade Nasdaq, if you trade S&P 500, Netflix is one of the corporations inside that index. So might have a little bit of volatility if you are trading those. Earnings. They release the estimates right now, and we'll see during the earnings what the actual numbers are. So they're looking at $4.19 earnings per share and just over $10 billion of revenue from the last quarter. Okay, and then we'll see the actual numbers that come out. Are they beat? Are they going to be below these estimates? And then we'll see how the conference call is after that. Okay, so you can also listen to the conference call. That's kind of a clue as to what is going on in the future pipeline of the corporation. What are they talking about? Can they justify the numbers? If it is a numbers beat, why? If they don't beat the numbers, why? Can they explain it? What happened? All of these questions. Okay, guys. Then we have United Airlines. Interactive Brokers Group. So you can trade this company. This is a great platform. We're going to be getting into stock and options tomorrow, starting just some intro stuff. So when everyone asks, Ron, what is a good broker to get started with? This is a good one. Interactive Brokers. They are pretty much worldwide. So again, do your due diligence. Check this out. You can always, I always 110% recommend anytime you're opening up a broker, always download a demo account and try it out first. Get familiar with it. Download the demo account with whatever you're doing and then see how it is to chart, taking trades, but you're doing it in a demo environment where you're not risking your money, okay, until you feel comfortable, and then you can start to deposit your money and start to trade. But everything you should be doing at the beginning should be with a demo. Even if you've been in the markets for 30 years and you're very advanced. If I'm trying a new platform, I'm not just going to go and download it and deposit my money and just start trading when I'm unfamiliar with the platform. I want to get familiar with it, so I'll open up a demo account, just practice. Once I get familiar with it, then I'll deposit my money, okay? So it doesn't matter what level you are as a trader, it's just common sense. Start off with a demo and practice, okay? And then we got More Finance, Capital One, Progressive Software. Then we start to get into the smaller names down here, okay? So the big name obviously is Netflix and United Airlines, Interactive Brokers. We move into Wednesday pre-market. Okay, we continue with Procter and Gamble. Okay, if you trade Dow Jones, this is in there. Procter and Gamble, Abbott, Johnson and Johnson. Some of you guys are familiar with this, baby shampoo, and then the million other products that they offer. So Johnson and Johnson, Halliburton Company, GE Vernova, Ali Financial. So then we start to get in again smaller regional financial institutions. So as of last week and this week, you had your big financial names reporting. we go through. Finance has a weeks of reporting. Tech has a week of reporting. Every kind of industry and sector always reports. So if you are trading that sector, get familiar with the weeks that they will be reporting, because you want to know, are you trading going into earnings? Are you trading outside of earnings? All of these things, because sometimes the price and volume tends to increase or decrease the closer we're getting to earnings, okay? And then we move into Wednesday after the close, just going through these names: Kinder Morgan, Alcoa, Discover Financial, Horizon. So again, you know, like, these are not your big corporate names like Netflix. So I wouldn't be paying too much attention on Wednesday after the close, myself personally. Thursday morning pre-market, again, GE Aerospace, American Airlines Group, Texas Capital Bank shares. Again, nothing too specific to what I trade, so won't be paying too much particular attention on earnings Thursday morning. I'll just continue to watch the markets in general, the indices, and pre-market trading. Then we go into Thursday after hours. We have Intuitive Surgical. This corporation really took off during COVID, and I haven't really looked at it since then, a couple of years back. But again, if that's what I'm interested in that sector, if you're interested in surgical and using kind of AI robots to do surgeries instead of actual physical doctors, humans, this is one company that you can look at. So, you know, like, do you trust a robot doing surgery over a human being? But this company that's what they're gearing towards. Who knows what the future holds for this? Texas Instruments Incorporated, again, and then the banks, the smaller regional banks, will be reporting. You can see a lot of the smaller regional banks are reporting like growth is in red. Okay, so that might be a clue to what's going on with the bigger institutions. Okay, it all trickles down. If the smaller regional banks are losing money or collapsing, then what does it tell us about our big name banks? So can tell us about the whole financial situation of the United States, you know, so helps a little bit. Now we get into Friday pre-market. Verizon. Okay, so this is a big name, you know, like they sponsored the football games. If you were watching the Bills game, like, you see Verizon everywhere. So this is a big telecommunications, Verizon in the United States. They report at 7 a.m. American Express. Okay, so we're going to see here what's going on with credit spending. I'm sure credit debt is very high, not just in America, but globally. So like, that's just common sense. You can see that a lot of individuals are stuck in debt right now. And how did they put themselves in debt? Well, by using credit cards. So we're going to see what American Express is saying over here. We're looking at earnings, their revenue. Just continuing to move over here. And then Friday, after hours, nothing. We go into the weekend, okay? So we've gone over Forex Factory. We've gone over earnings. Yahoo Finance, just anything in the news right now. Obviously, there is a little bit of stuff going on with Trump right now, maybe 30 minutes away from getting inaugurated. So here in Canada, federal cabinet braces for trade war as Trump is inaugurated. So he's threatened Mexico and Canada with 25% tariffs. He has pledged to sign an executive order on today, January 20, to impose those 25% tariffs on products in Canada and Mexico. So we'll see if he actually goes through with it, if maybe he holds off, if they're going to get into negotiations. Same thing with TikTok. You probably saw that TikTok in the US just stopped working, and then he made a tweet saying that he's going to negotiate, maybe give them 3 more months to negotiate and maybe come up with a deal. So I don't always take what Trump says because could be just talk. You know, I want to see what he actually does. Okay. Could all be political talk, positioning himself. But now when he takes over, then we'll see. Then we'll actually see what he's doing. Okay. So there's BMO poll says that 63% express recession concerns, 48% believe Canadian economy will weaken. So these tariffs, if he in fact puts 25% tariffs on like Canadian exports going in, that will directly impact the Canadian economy. So this is a situation that we need to watch. Bitcoin rallies to record level. Okay, you saw Bitcoin. It was at 107. It dropped all the way sub 100,000. It hit that 100,000, 99,000, that psychological block, and then it bounced from there to a new all-time high, just under 110,000. Right now, we're trading at 105,000. Right in between 100 and 110, that 50% level. Bitcoin is just consolidating at 105 to see what's going to happen with Trump. What's going on over here. Okay, so these are our markets. Tomorrow when you guys join us, we're going to be looking at individual securities. We'll be looking at MicroStrategy, we'll be looking at Nvidia, we'll be looking at Apple, we'll be looking at AMD, Advanced Micro Devices. I like that company. I might be starting a position tomorrow on AMD. I like where it's at. We'll talk about it tomorrow. It's kind of it's at a discount right now, about 20-25% off its highs. They develop chips. Chips are in high demand. I always look for good quality securities, providing a product that's in demand at reduced discount levels to buy, especially once we do a top-down analysis and we see what level it's trading at. Is it trading at demand? Is there still room for it to go down? All of these things. But we're going to start that tomorrow, and we're going to finish off the week with stock market analysis. I hope you guys are excited about that. We're going to do something different. Dave will take care of all the Forex with the group. And Discord and things like that. And then finally, we're going to start to make a pivot into the stock and options market. Here at SST. We'll do it 2 weeks we're in New York. We're going to focus on stock and options, and then the other 2 weeks we'll maybe have 1 week of Tokyo session, 1 week of London. We can go back to doing Forex and all of those things, but I really want to step it up, guys, with you guys. I believe that you guys are ready to learn something new. We're not just going to jump in the markets and just, start trading without any education, obviously. So we do have lots of webinars and boot camps coming forward. So we want you guys to join our weekly webinars so that you guys can continue to learn, so we can continue to just continue to move in these markets and give you the education. Okay. Discord, guys, some fantastic moves over here. If you're looking at US 30, right over here, this was a sell at this level, 43,700. Okay, it kind of peaked above there. Tweezer top highs exactly around 43,800 psychological levels, learning your technicals, and then came back down and then started to push. So that's kind of a move where they pumped it up and then they kind of reduced it right back down by hitting all those pending orders. And since the 43,700 started to drop all the way down here, beautiful move for over 150 pips. Gold over here, gold. Coming into, oil, 77.50, nice psychological block over here, and started to sell away from it all the way down to $76. So that's $1.50 per barrel. That's 150 pips, points, whatever you want to call it. Okay. Let's start to move over, guys. Over here on our website, stocksnipertrading.com, if you click on more, there's a free educational blog, common mistakes traders make in the live markets, lack of trading plan, over leveraging, ignoring risk management, emotional trading, failure to adapt, over trading, chasing losses, lack of research, neglecting to learn, ignoring economic indicators, all of that. So these are free blogs, guys. There's a little bit of everything for everybody here, showcasing what we do. Okay, this was last week's trading with MicroStrategy, gold trading over here, anything to do with technicals, fundamentals, price action, tons of free information here for you guys. But not only that, we have a journal of our trade ideas and our signals over here. If you select Scalper Pro Trades, you're going to start to see that there's a journal here of the before and after of our trades, of how we take them. It will say what the security is. XAU USD is gold, NASDAQ is NASDAQ. You can see what we're looking for. Here's a short position to sell it. Here's a long position to buy it. What levels we're looking at. We've explained static levels. We can continue to explain what those are. But you can utilize these charts. You can backtest these charts. You can see what we're looking at when we're trading these things. So there's and these are just going to continue to get populated with all of the trade ideas we send out and education provided as well, to teach you guys how to use these. But you should accompany these with your own analysis and use it as another indicator or confluence to your own trading. So maybe if you're looking to sell gold at that level as well, and SST sends out a trade idea to sell gold, then maybe that might strengthen your decision to take that trade, because we're looking at the same level as you. Okay, and hopefully that does help you guys. And education wise, we got a ton of education, lots of education. We got boot camps, courses. We move into webinars at each level you're at. If you're a beginner, I highly recommend you start off with our first 10 beginner courses right over here. And then as you advance, I believe that you should take these ones, your 11 to 30 webinars now, to start to get you more at an advanced level. And then once you feel like you want to learn more intermediate stuff, then your third one has a lot of webinars over here. And then we don't stop there. Once you get those, then I'm also starting this SST Super Systems of Trading. You're going to see me posting various various topics in here. Overall, to help you guys with your trading. We kind of left it off at what is tape to tape trading, and I'm going to continue with this, but we're also working on our stock and options program as well. So you're going to start to see more and more stock and option webinars in here. And then also you're going to see individual securities. So the way how we broke down MicroStrategy last week, you're going to start to see me do that with more companies. So it will be AMD this week, and I'll break it down. We'll learn what the company is, and I trade it with you guys, and we're going to start off with equities, share trading, and then we'll move into more of the more complicated stuff with the options. Okay, and everyone on YouTube, thank you guys for joining. There is a free Telegram channel provided for you guys. It's right over here. It's pinned at the top of the YouTube channel for you guys. If you want to join, we'd love to have you. We show the before and afters of the trades we take with the trade signals, everything we have, our upcoming schedule for the week, our Scalper Pro journaling over here to show you what securities we traded, what the results were, before and after of the trades. These are the blogs that are released to you guys. Guys, some quotes on the way to reaching my goals. Lots of doors opened and closed. You guys might see that as well. On your path to hitting your goals, there's going to be doors that close, but there's going to be doors that open. So it might be a blessing. It was a blessing for me when one door closed and another one opened. Hopefully for you guys, it will be a blessing too. But just continue learning, guys. The more you know about the financial markets, the better you will be as an overall trader. So just continue learning these markets, okay? So let's get into it. I'm going to start off with gold. Are you guys okay with starting with gold? XAU USD. We're going to do a full top-down analysis, but I just want to talk about these levels as well, because if you guys remember, if you were trading with us back a week ago in live London, these were levels that were set, and I said that normally when I trade, I leave the levels, I don't get rid of them. I just get rid of them when we start fresh every single day with you guys, so we go through an analysis. But you can see that I have the clocks. Anytime they reach these levels, they give me an alert to check out the levels. We created this when we were doing this. We figured out that maybe around here would be the second bottom, and you see how naturally the market came down to this second bottom level. If you missed the first opportunity here, then just follow the volume. How did it close? Did it close? Look at how it's ignited above here. Then you could have bought this candle like Tuesday 10 a.m. and start to move right back up. That could have been maybe basically your daily goal. From 10 a.m. it was 2665 level, and then it kind of hit 2672. So that's 50, 60, 70, 80 pip move. And then if you can continue watch, remember these, the white lines, hourly point of interest of support. The purple lines were the opening and the closing. Yellow lines were the points of interest on the daily. And then if you missed this move, you see the pullback, how it came all the way, pulled right back, and look at what it wicked right off of. It wicked right off of our hourly support line and continued to move up, creating a new high, finishing off that W, closing at a critical level above the high of the day and at that 50% of yesterday's red volume. And then we had the the continuation to push down, but look, it got gobbled up with a nice bullish engulfing candle, making a higher low where we were diverging away from this hourly point of interest. So what that's telling me, just by looking at this and not even really looking at an advanced depth of market, is that the depth of market is increasing. The support is getting higher and higher, and it continues to come up to that resistance and break out for a higher high. So you can see that we have a trending bullish market, all started down in this area. Okay, so we continue to move with a higher high, higher low, higher high. Again, look at the pullback, pulling back red all the way down here. Where did it pull back to? Again, to this zone, this area over here on the higher time frames, the yellow and the purple lines. We taught you all as well how to figure out a zone. If you don't want to just use the physical line, look at the bodies just kind of above the zones and stretch it across, and you can kind of figure out a little bit of a demand zone. And then you can see how it actually came right into the zone and wicked out of there. It came in again and wicked out of there, and you got that huge bullish volume coming right back. And then from the past over here, where we figured out our first line of resistance, we stretched it into the future, and then you can see how it traded right into it, that impulse move. It's peeking its head up there saying hello, what's going on up here, and there is supply, and then they push it back down, but they still came and created that higher high. But it was in fact a very nasty rejection where they closed it back down. Then it came back all the way down, picked up again that liquidity, trying again. It's trying another attempt, and finally you get green volume to start to close above that red box. And then when you get that, you go through the motions of flipping the red to the green and continuing to drive it into the future. Okay, and then you see how high we went off of there. Look at where we went, and then look at what we hit. I didn't adjust these levels. This was all from the London weeks ago, these levels. So the hourly volume traded right around that yellow daily point of interest of resistance, and look at what happened. It pushed down. Where did it come up? All the way back down to the green block, but they kind of broke it down, but it came right back up, so it kind of recovered with a V recovery. They picked up the liquidity down there and continue to drive it up. So this is where we are trading right now on the hourly. Okay, do you guys want me just to continue? I'm going to do a full top-down analysis, but just keeping with this theme. Now if I look at it, what are the hourly candles doing right now? Okay, this is where I want interaction. What's going on right now? Like you can see, I'm on the hourly. I can see the hourly candles. What's going on right now? Consolidation. Yeah, Sergio. Look at how choppy it is. Ask yourself, why is it trading choppy like this? Well, we got US markets are closed right now, and you got Trump going to speak in what, 10, 15, 20 minutes. So the market is just trading sideways. Okay, and you can, if you can't see it, just look at this level. Yeah, you can trade in between here for some smaller like intraday trades or some scalps, but when I'm looking for a trending market, there's no trend here. There's nothing going on. It came up green, it came right back down red. It came back up green, it came right back down red. It went back up green, it came right back up red. It's coming right back up green now. Are we going to continue to come back up green above here like 27.11, 27.12? Or is it going to come back down red and test this level, 27.03? Are we going to break and drop down to this green block? Okay, so that's why with this block, stretch it into the future. Okay, because this is our demand level. It used to be resistance here, turned into support right here. They broke it right here, but it was quickly bought right back up. So we'll see if we get another retest of this block. Maybe it might not hold, and maybe we start closing red below here. Then we flip this green box red, and then we use this as a supply box. And maybe if it comes back up green, this might be supply, and then we're shooting back down to this white line. If this white line can't hold, then we're coming back down to these critical levels right over here. So stretch that into the future. Set yourself up for the volume. See this demand zone where it created kind of that double bottom where we had? Stretch that into the future. We are nowhere near this level, but stretching it across into the future will prepare you if it ever does come back down in here. Okay. If I draw a trend line from what's happened from up here, okay, we can see it push down It's still kind of pushing down. I can connect it at the bodies, at the wicks, but pushing down. Okay, so I don't want the line to be green. I'm going to make it red to represent resistance, and you can see. So I kind of put it right up the highest point, 27.25. Nice psychological area. Those 25-point increments, 27.25, got rejected. The buyers tried to bring it right back up, so it kind of hit that trend line right around there, around 27.17, 27.18. The sellers, in fact, came in the market and they broke the level of support that was created on the hourly buyers, and they dropped it. And then they came right back up, and look, it kind of met that trend line and pushed back down. They came up again, still by that trend line, push right back down. They came up again. They impulsively broke it out, but you see how we're still trading in that consolidated hourly box, and we're still trending down. So what we need to kind of reverse this entire momentum of gold and continue to go bullish is we need hourly volume to push above this trend line. Okay, so if I get that push, I'm above the trend line. But I don't want to just push above with a wick and then get rejected back down. I want to push above with green volume and maybe close green above here. We failed to close above there, we failed to close above there, and we failed to close above there. So if we can get a nice green volume closing above this white line around 27.12, 27.13, maybe that will shift sentiment to the upside. Maybe we'll get a strength in depth of market below us. So maybe we need to come up here green, close, maybe pull back, and now these levels are levels of support right here. Maybe if it comes back down to the trend line now in fact is green. It might come down there and retest it, and we bounce off because now that trend line that is red will turn into a green trend line, a supporting trend line. So you can do the same thing with trend lines, not just with zones like support and resistance. Same thing with if you're trending up bullish, it's ascending, it's a green trend line. If the volume closes below it, just utilize the same trend line. Don't change it, it's static, but just change the color of it. Does that make sense, guys? And then maybe we can start to push back up to test 27.20, our daily point of interest of resistance, and maybe get above that 27.25, create a new higher high. Okay, but right now it's just trading sideways. So you can go down to the lower time frames, you can go down to the 30 minutes, you can go down to the 15 minutes, you can go down to the 5 minutes, you can go down to the 1 minutes, and you can watch exactly what's going on in here. So if I was to go to the 5 minutes, that's exactly how the 5-minute volume is trading in this hourly rectangular consolidated box. Not the greatest of price action. We've got wicks above us, we got wicks below us, very choppy. Maybe when Trump speaks or later this afternoon, maybe it might start to move, but you also got to remember that COMEX market closes at 1:30 p.m. Eastern. Okay, do you guys want me to start with a fresh top-down analysis on gold, start to get some new levels, or do you guys want me to just keep it how it is? Let me know. What do you guys want in Zoom? Do you want a fresh new analysis, or do you want to just watch how it is right now? It's up to you guys. We can do another top down for another security, and we can leave gold as it is. Dow, Sergio? Absolutely. Oh, yeah, Patrick, share it? Yeah, absolutely. 1 second. Yeah, let's do the dirty. I'm ready for the dirty. It's been a while. Patrick, if you can check this Zoom chat right now, you should see the TradingView link. So that's our gold chart we got right there. Do you guys want to do a little bit of top down on the dirty? We got enough time. We got about 12 minutes before hopefully Trump will speak, and we'll see how gold will move. So let's just shift focus to Dow, okay? And let's see how Dow US 30 is trading. We'll do a full top-down analysis, okay? If you're on YouTube, can you guys hit the like button? Do appreciate it. Subscribe to the channel, guys. If you want to learn a whole new world of stock and options, hit the subscribe and join us on a daily basis. I promise you, you're going to learn something every day. You're going to learn something new, okay? But I'm not going to beg people. It's up to you. If you want to learn the stock market, we're here to teach. If you don't, that's your choice. I will be trading the stock markets. It's a great opportunity to take your trading to the next level and to show you guys new things that maybe you didn't know about. So we're happy to show you that. Okay, so let's figure out what's going on with Dow. I'm on the hourly right now. So obviously, you can see that it's making higher highs, consolidating, it pulled back, higher low, continuing for a new higher high, pulled back one time, two times. Okay, I can see double bottom, and then it continued to push for a new high. So if you ask me on the hourly, Dow is bullish right now. Is it getting overbought? If you look at your RSI indicator, yeah, probably there is some bearish divergence, but that doesn't give us the right to just start selling. We got to see red volume closing below critical levels and see sellers taking control of the market. It's just like a football game. If you were watching any game this weekend, any game, which team took control? And that's kind of here. Is the red team in control or the green team is in control? If I look right now, the green team is still controlling this time frame, the hourly. But however, if I move to a different time frame, it might be a different story. So I don't just do analysis starting with the hourly, I go to the daily. Let's start off with the daily. Let's start to understand what is going on overall on the daily. So if we look at the daily, like over here, it was resistance. It pulled back and we broke through there. So it created a new higher high, new all-time highs up here, pulled back, again, new higher high, pull back, higher low, new all-time high, pull back, higher low. We continue driving. Look at the pullbacks. They're just small pullbacks. They just pull back and they continue going for new highs. Pull back, trading into about 50% of that big daily bullish candle and continuing. So now we have our new all-time high. It's been a while since I did a Dow analysis with you guys. So hopefully all of you guys on your charts have this zone identified. Chachu, do top down on US 30. That's exactly what we're doing right now. Okay, we are on Dow and I'm starting with the daily. So this is a top down. I'm going to bring it down to the 5 minutes. Okay, so for everybody, make sure you have this zone identified and pull it into the future. Do you understand what I'm saying? Like that was an all-time high, just just above 45,000. Okay, hit that level and look at how it dropped off. We might be potentially coming back up here, but we're not there yet. So I stretch this into the future. Okay, stretch it into the future. That is, do you want me right up here? Like how we do this? So go to your settings. This is what you should be doing. Like to make your charts, if you're going to leave your charts every single day, then just write a text so you know what this is. Like I know what this is if I'm doing it, but maybe writing it will help. Remember exactly what it is. So this is an all-time high supply zone. Sometimes it gets in the way if I leave it to the left, if I leave it right in the middle. So what I do is I kind of stretch it to the right. We'll extend it to the right and we'll leave it over there. Okay, so we know what this box is. All-time high supply zone. Okay, so we've identified one level. That's perfect. We've done good work. Now let's look for another level. So anytime I figure out one, this is what I do, guys, okay? So anytime I figure out one level, I try to figure out an opposing level. Okay, so this was pretty obvious to see the all-time high and stretch it into the future. Now let's maybe figure out a pretty obvious demand level that we can literally see, that's easy to identify, where we don't have to debate it. If we just put it on there, maybe we can all agree. If I put a green box right here, do we agree or disagree that that is an area of support or demand, whatever you want to call it? Let's just, if you guys disagree with me, I can explain it. If you guys agree with me, we move on. Okay, so the reason why I put that there is just it's easy on the eyes. Okay, you can see all the supporting green volume hold. It pushed up. Okay, so it's created support. The buyers were there, and it pushed to break a new high, which it did. Then the pullback. The pullback will tell you the story. So look at how it came down, red, 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 and look at where it came right into. It came right into the green box, and who was there? The buyers were there, and they pushed it again right out of there, creating a new high above 43,300. So 2 times now. Now it's telling me that there's more support here, creating some type of demand. Now, if I look back again, what's already happened, like this is backtesting, this is historical price action, but I can see this leg when it was coming all the way down, look at what it did. It hit right here, Monday, January 13th, last Monday, last week, the start of last week. This is where we had our bullish week last week. It started, where did it start? It started in this green block, this green zone. If you identified this last week on Dow Jones, and I hope you guys do, because you should know Dow Jones like you know your spouse, like you know your children, you should know this. Look at Monday, bullish move. Tuesday continued, Wednesday continued, Thursday a little bit of an inside bar, and Friday bullish ignited candle continuing into Monday with Trump right now. Okay, so we're now breaking through. I can see a resistance level, I can see a point of interest right now, but we're not there yet. We got to now just write some fancy words in this green box. Okay, so we agree that this is demand. Okay, so what we can do is let's write something fancy in here. What can we write? We can write that this is a daily. Okay, we are on daily, correct? So this is a daily demand zone. And stretch it into the future. Easy peasy. Okay, daily demand zone. If the volume you fancy, huh? Ephraim, very fancy. Today I'm feeling fancy. Okay, so if it ever comes back down here, maybe we bounce back out of here. Maybe, what if it's 2 bounces, a double bottom? Shit, then we can maybe break that all-time high. You know, like the more support we get, the better. But if it breaks that zone, you guys know the rules. If it comes down here, and let's say it breaks, okay, it's a big bearish red move coming down, and it breaks and it closes below there, then what do we do? Then this cannot be a daily demand zone any longer. We have to just flip the zone. I'm not changing the size of it. The size was already determined in the past. I'm just changing the color. And then I'll put another fancy name on it. I'll put that this is a daily supply level. And then obviously we broke the depth of the market. There's going to be pending buyers down here, but if they're buying, now they're buying into a supplier. So if it comes back up green, 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 it's retesting this block, and if it gets rejected, you know the confirmation is that there is sellers present there ready to push it down. So then the market might start to shift and reverse and start going down bearish. Okay, so that's how you can figure out whether you're buying or you're selling. But currently, we're still green. Oh, I got rid of my my letters when I did that. Oh no. Okay, so we'll do it again. Practice daily demand zone, and you can leave this on your charts after the call. Leave these levels. You know, I do this every time, you know, start fresh with you guys, but you don't need to continue to tomorrow or the next day get rid of these. If the volume is not there, it's still this pending block. Okay, then you got to focus on what's going on up here. Okay, so going forward, those were pretty 2 obvious levels. Obvious all-time high supply, obvious daily demand zone holding. Now we've got some zones and structure in between here. I can see another nice clear zone. And Ron smoked the green today, but I can still see some nice zone right here. What about here? Why are we not looking at this area? Was this not a red zone at that point in time on the daily? Right there. When it came up here, mid-October, it came right in there, and then look, they dropped it. So you can literally see that that is a rejection. Now, continue moving this block into the future. Okay, you can see that big green candle closed above. If you changed it to green, you can see the pullback It definitely broke the green block, but it picked up the liquidity and it came and it closed right back in there. And then the next day, red, 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 higher low. Look at the volume close above. It closed above. The next day, there's your retest candle. You could have entered on November 21st. Right there. You have all the confirmations you're looking for. They grabbed the liquidity. They broke. It came back up, closed in the block. It closed with green volume above. You got the perfect retest of the block. Right there. You could have bought that leg going up to the all-time high supply. But do not stop with this block. If I stretch it into the future, you see how the block still holds. And now it's the big red candle closed below right here. Go through the motions just like a basketball player. Did anybody see Anthony Edwards dunk like a week ago? Anybody see Anthony Edwards dunk? It was probably the dunk of the year. Poster, disrespectful. I love it. But see here, closed below, came right back up and got rejected right back down. So let's continue with this zone. Now, look, as of Friday of last week, we have a green daily candle closing above this zone. So right now, as we're speaking, we're now in present time. We're making this a green zone and we're stretching it into the future. Okay, so this one is probably more active. Like the market is not too far away from coming back, retracing back down in this green zone. Will it come back to this one? You can see now maybe the depth of market might start to strengthen right here. So we gotta now, maybe this will be a daily demand zone. Okay, so we're gonna also write on this one. Oh, it's 12 o'clock. Okay. What's going on? Okay, so it's what's this guy's name? Sorry, Vance. He's getting sworn in. The vice president. Yeah, are you guys? Anybody watching the inauguration? Trump looks sleepy. Probably. Okay, guys. Okay, so I'm just continuing now. Okay, so when we're looking at this, currently we're pushing down from the all-time high. Okay, so if you look at the overall trend, it's pushing down. It's coming back up. Might just be retracing. Maybe they push it back down. But if it gets pushed down, we got to test this green zone, 43,200 level, before we can test this one down here. Okay, so this one might create a higher low. If it doesn't get respected, the volume will trade back down in here. Again, then we go through our motions. If it comes down red, red, red and closes below there, we flip that green zone red. Maybe it gets rejected. Maybe we're selling back down to this zone. Okay, you know, our traditional zone to zone trading. But now what I look for are points of interest on the daily. There's a lot of points of interest to look at. Before we make it up to these specific zones, there's structure that's built in between the zones. So I can see like right here, see this leg where it was pushing up, it did not reach the red zone. It got rejected right there. You can either look at the wicks or the bodies. That's your personal preference, okay? Or you can just go right in the middle, wherever you feel, or look for a psychological number. That's your choice, okay? Again, it's up for debate. Some of you guys might put it at the highest range at the wick. Some of you guys might put it at the bodies. Some of you guys might put it right at that gapped market right there. Again, it's all personal preference, but whatever you do, keep it consistent with your charting. If you're going to pick the range, like the wicks, continue to pick the wicks throughout your analysis. If you're going to pick the bodies, stick with the bodies throughout your analysis. If you're going to choose this gapped zone, continue figuring out if there's any other gaps in the markets and keep it consistent. If you keep your analysis consistent, it will make more sense to you. Okay, so I'm just going to put it right here. Let's see where I'm going to put it. I'm going to put it right here. Okay, and I'm going to make I'm going to make the line yellow, to represent the daily. Okay, so I'm just putting it right here. I'm just putting it at the bodies currently. Right here, I'll make it a little thicker. Okay, so you see where I just placed it? I placed it right at that body. Okay, there, I could have placed it at the high wick, placed it right at the closing body. The next candle opened right there. So that shows me like the impulse moves above there and then push down. So this green candle, you see how it closed right above that yellow point of interest, and then they gapped the market up to continue to go up to that all-time high supply. And then now we've got closing red volume below that yellow line pushing down. So if we ever do come back up to test this yellow line around 44,282, around there, maybe we'll see, will this be resistance and push it down, or will the volume close above and then we can maybe test that all-time high zone. Okay, so what I write on this is we're going to write, okay, we'll continue with the white theme. We'll write that this is a daily point of interest, POI, of resistance. Okay, you guys follow me there? It's resistance because the volume currently is trading below it. So if it comes up green, 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 this will be resistance until we get a confirmation. Either it gets pushed back down, rejected there, or the green volume is strong enough to break through there and close above. Then this line will leave the line, but it will be a point of interest on the daily of support to see if it continues to hold, and then we can drive. Okay, so that's one area. Another one I can see is kind of right here, exactly where we're trading at right now. Why did I choose this area to place a point of interest line right here? Look, you can see that big, huge, bullish daily candle. It closed right there. The spin top kind of traded right under it. Then we continued to move above it. We retested it. It closed below the yellow line, and then we dropped. Here again, it came right back up. Look at the closing volume right above that yellow line, small retracement, and continued to push up. Over here, you had that bearish candle close below the yellow line. There's that green, green, green fake out, and then push down, close near low, and then that huge drop. Look at where we are right now. Our daily high just kissed that level right now. Okay, so this is now where I start to dissect today's daily candle. Okay, so let's now continue to move forward. Now we're zooming in. So you guys remember, were any of you guys trading last Friday? If you were trading last Friday Dow Jones, it was a pretty bullish day. It opened bullish. It didn't even look at the prior low, how low it was on Thursday. It didn't even attempt to take that out. So that should give you a clue that it's going to be potentially a strong day of volume. Okay, guys, these are the clues you should be picking up candle by candle. Whether you're trading the daily, if you're trading the 4-hour, hourly, 30-minute, 15-minute, 5-minute, 1-minute, 30-second, whatever you're trading, every candle gives you clues. It leaves evidence behind. So you got to really pick this up, and if you learn this, you can pick it up in real time. Okay, and then you scalp at whatever time frame you enjoy scalping. Obviously, the lower you go, the more volatile it is. If you stay with the higher time frames, the less volatile it is, and the less stressful it is. Okay, so it all depends on the type of person you are. Do you like to trade fast in and out, or do you prefer to be more conservative with your trading and just trade the higher time frames? Okay, you will figure out what's best for you with trial and error. You will try scalping. I've had people try scalping and say, Ron, this is not for me. The hourly time frame is better for me. I say, fantastic. Let's perfect the hourly trading then. Let's continue to learn it. Some of you guys say intraday trading doesn't work for me with my lifestyle. I'm working, I got the kids, I got this, I got that, but swing trading works for me. I say, fantastic. Let's learn the best possible swing setups and what securities to swing. So all of this thing, you can do whatever you want in these financial markets, but you got to do what's best for you. Don't do what's best for what someone on YouTube is telling you what they do, because that might work for them. You got to figure out what works best for you. Okay. So we see it started off with a strong day last Friday, closed, it made a high and then kind of sold off. Maybe the Friday it kind of sold off on Friday. That's your intraday traders. That might be your scalpers, closing positions, getting out for the weekend. It might be maybe a weekly swing trader. Remember, look at the days. This started on Monday. What if the weekly swing traders started a position here on Monday or Tuesday, and look how far they're in the profit. Look at Wednesday, Thursday, Friday. So maybe they took a majority of their weekly profit. That was their swing position for the week. They made their weekly goal. They're getting out of the market. So that might represent what that wick is, but it wasn't like a really heavy wick selling a lot. It still maintained a lot of that bullish volume in the candle. Okay. And then now let's transition over the weekend, Saturday, Sunday, and how we opened today. So we can see now the closing price on Friday. We can see the opening price exactly where it is. I tend to always use the closing and the opening prices as points of interest. Okay, is it an exact side-by-side open? No, there's a gap in the market. So you can see where we closed on Friday. We closed right there, 43,462. I'll put a yellow line so I can make it visual so you guys can all see. That was the closing price on Friday. There's no debate here. That's where the candle closed. You guys might have a different number on your broker because this one I'm using is Capital Com. You might use a different broker. You might see a different closing number, but you can do the same analysis with your charts. Okay. So right there, the body closed. Now, did it open today exactly at 43,463? No, it didn't. Look at how they gapped up. It opened right there. Okay. So there's the opening price, 43,478, 479. So that little, see that little imbalance there from the, look at the candle bodies. Okay, look at what I'm doing. I'm going to make it neutral. Guys, do you guys see this? Do you see what I just did there? That was the closing price on Friday. That was the opening gap today. Guys, I need a yes, no, maybe so. I need something. I need you guys to help me out that you guys understand what I'm doing. Otherwise, am I just wasting my time here? Do you guys see this gap right here? Okay. When you see a gap, it's a clue. It's a clue. Think of a clue. Ask yourself, why is the market gapping up? Okay. But look at what they do then. When they gap it up, immediately it comes back down red, 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 red. So they filled the gap. You see the gap right there? The candle came red, 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 red. Okay, so they filled that gap and then they traded a little bit into Friday's bullish volume. But you see, it didn't come all the way into, if you marked 50% of bullish volume, okay, I would be marking 50% in there. I would have my Fibonacci sequence on Friday's volume. I would be picking out my zones, everything, you know. But I can see it came down red, 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 and there's the low of the day today, 43,428. So what I do on the low of the day is I place a purple line, and that represents the low of the day. I can write it to inform myself that that's a low of the day. Okay, so is the volume in fact close to the low of the day? No, you can see the volume is all the way up here. Okay, so what happened? We filled that imbalance, we filled that gap open price, and it came down a little bit more and then went right back up. So it's still making a nice higher low off of Friday. We still have majority of 50% of Friday's volume in the market, so it's still considered to be bullish. Okay. Now let's continue watching. So we opened. It was initially bearish, came down here, but quickly got right back up. And look at where it came back up to the opening price. So the opening price is a daily point of interest for me. It doesn't have to be for you, but it is for me. So I always write a daily point of interest right here. And then if you want to justify what this one is, that's your opening price. Okay. I used to do this with all my charts back in the day. I don't do it anymore because I know what these lines represent when I'm trading. So maybe for you guys, it's good to do this, good habit. Once you guys get in the habit of doing this, you guys don't have to sit and write all this down. You guys can just color coordinate your chart. And then what happened when we came back to the opening price? The buyers stepped in and pushed all this big green volume. Look, it was green, green, green. And look at, we took out Friday's high. Okay, so this Friday's high wick, that has to be a point of interest. That's where they closed the entire week, Friday. That's like, I didn't close it there. You didn't close it there. The market makers closed it there. sorry, that was the high. I'm sorry. The high. The close was down here. But the high, that was the high of the week. That was the high of Friday. That is an important point of interest for us on the daily. So I continue to write on this right now. What is it now representing? Okay, so I'm going to ask you guys, is the volume currently on today's daily candle, is it above or below this yellow line? Okay, can you guys see it? I'll zoom in a little bit more. Let me put it exactly with Friday's high. We are currently just a hair below it, okay? So, yes, we're going to trade around here, but technically speaking, this yellow line is now considered to be resistance because the volume is technically below it. Yeah, the volume can easily come right back up there, but that's why it's a point of interest. But right now, I'll write resistance, just technically speaking, okay? So this is, again, a daily point of interest, and it's also Friday's high of last week. So this is a daily point of interest, and it's representing resistance right now, okay? Because the volume is below this level. If you want to also get a little bit more, write more, you can write that this was last Friday's high. Okay, so then when you're looking at this yellow line, you know that this is last Friday's high, you know it was the high of the week, and we see what happens with this, okay? So now, we still had something that happened here today. When we came right up to last Friday's high, the buyers pushed it out. This was a massive big green candle, and that's our high of the day right there. 43,797, just shy off of that psychological 43,800. That's our high of the day. And then you see this big yellow line that I had from before? Look how close like we were to tapping into that yellow line. Okay, so this is where I draw a zone now. Let me show you guys. Watch, pay attention to this. Okay, let's just not stop with the colors. I have one purple, so obviously I have to have another purple at the high of the day. There's my purple high of the day. And then someone's going to say, well, Ron, you got two lines that are so close to each other. Well, then that's where I create my zone, okay? Because I'm using historical price action, that yellow line, with today's. And then I just box it in. So let me show you. Let's just write here on the purple line that this is today's high of the day. Guys, a nice thorough analysis can help you out a lot trading, okay? Whether you I'm taking a little bit extra time to explain this, but normally this can be done in 5 minutes, 10 minutes maximum. You don't need to spend like 30 minutes breaking down everything that I'm talking about. You can do this with your eyes closed once you get in the habit of doing this, okay? So that's the high of the day. We can see we came up there and then they pushed it right back down, okay? So this little block here, that's where I can create my little red box, okay? And then I look at where it is compared to my entire daily chart, okay? So then I see that the sellers are stepping in right here, and it's a lower high. It came up really nice and bullish, but now this is our resistance going forward. Stretch it into the future if you want to, and we will see if we get daily volume closing above here, and then if we can start to make our way up to this next daily point of interest. We might push back down, but now we gotta monitor today's daily volume. Okay, so what do? Take a look at the volume. Okay, it's trading in between this yellow line and this yellow line. I can figure out exactly where 50% of that volume is just by placing a yellow line just like that, okay? But we're not going to guess, okay? We're going to try and be exact with our location. So that's just wrong guessing where about 50% is. Again, the volume is moving, but that's generally where I think 50% is. I don't want to just guess. Grab your Fibonacci tool, put it from the opening price, put it to the closing price. Sorry if you don't see the numbers. I have to adjust it. 1 second. Okay, so what I do with the Fibonacci, if I'm starting it at the starting point, I like to make it green. My 236 I use it as a white level, keeping it neutral. It's a ratio. It's a Fibonacci sequence. My 382, very important level. It's a Fibonacci sequence. I keep it white. My 0.5 is not a Fibonacci sequence. It's just a psychological number. That's the halfway point. If you learn psychological halfway points in trading, it's a nice fair value area for price, for everything. Dave hates when I mess with the fib colors. I hate when he messes with the fib colors, but it's good. It's good education. He uses a different style chart. I like the black backgrounds. It's just I get headaches if I'm staring at white charts. So I prefer this. But anyways, 618. What I do is I keep it gold. Okay, gold or yellow. That's the golden line. 786, let's keep it neutral. Let's keep it white. 1 is our reversal from the green 0 to the 1. So then I make it red to represent kind of the entire move. And then if you want to continue with your extensions, 1618, I put it white. If you want to continue with the 2618, if you want to continue with how high you want to keep your retracements, keep it like that. Now you can see where my levels are from the opening price to the closing, well, where I had it, but it's moving right now. That's where I kind of picked where 50% was. I wasn't too far off. So now if I go exactly where it is, I place it right there at the 0.5. Okay, so now I know exactly where's 50% of today's volume. And if I'm trying to figure out a nice fair value daily zone, one level above, which is our yellow 618, one level below our 382. And if I want to box that in, I create a green box just like that. Now I've found a nice fair value zone if we do in fact retrace back into here. I've figured out where 50% is exactly, one standard deviation above, one standard deviation below to give me a zone. Okay, and then with that, then once you kind of figure out where it is, you can remove your Fibonacci. I can reset it for Dave. So, but I don't have time here. We got to continue. So what I do with this is, you guys see we kind of found nice fair value zone in today's volume, stretch it into the future, and we'll see if it will continue to hold today, tomorrow, this week. If in fact it doesn't, then we're coming back down to this daily point of interest, maybe the low of the day, maybe to this big green block. If we can continue to build off of this, maybe we're going to continue to drive back up. Okay. So now what we can do is, see how I have the high of the day and the low of the day? I don't know exactly what time it hit this, but now we can now do top-down analysis and we can go into lower time frames. Now this is where we can dissect today's daily candle, and you can either go to the 4-hour if you're comfortable doing, again, looking at the 4-hour analysis, you definitely can do that. I personally jump into the 1 hour, the 60 minutes, and then I can see exactly what time of day, what hourly was it trading in, and to see when it made the low, when it made the high of the day, what happened. Okay, so we've got our daily levels over here. All of these, the low of the day, the point of interest opening price, we got our 50% block, we have our point of interest on last Friday's high, we have our high of the day today, and these are our hourly candles, how they've been trading through this today. So now we can start to see where did this big green candle come from? It came from 8 a.m. this morning. Look, that was our red, and that's what created our low of the day. And you see now when I match up the low of the day, see the purple line, how it kind of lines up with that wick going forward. Okay, so it's a good supporting level right there. If I want to find an hourly block, this is how I do it. I'm not going to put this on the chart, but I'll just show you. Okay, so I use the purple line as a point of interest, a point of reference, a point of control. Okay, you see here where it dropped and it stopped right there. Here the market kind of dropped and stopped right there. Here the market dropped and stopped right there. Here the market dropped and stopped right there. Here the market dropped and stopped right there. But you see these bodies, those two bodies, I can use that now as a zone and bring it down to my purple line. I'll make it neutral so you guys can see what I did, and then I'll show you what I'll do after that. Okay, so you guys see that? Yes, no, maybe so. See how simple it is? You use your purple line, it told us today's low of the day, and then now we back test and we can see in fact how it was right around that purple line, but now I have a zone. So I capture that wick, I capture that wick, I got that wick, and I got that wick right up to the bodies. Now stretch it into the future. and make it green. Now you have an hourly demand zone, an hourly. Remember, this big green one is on the daily, but we might get 5-minute volume that trades right into this block and might bounce right out of there. If you got to write what this is, again, and look now, right above the low of the day, this is an hourly demand zone. Okay, so we can, if you want, you can write it and keep your charts where you know exactly what this is. This could be, okay, so 1H, or we get fancy, we write hourly, 1H or hourly demand zone. Okay, we're getting fancy here. Oops, I forgot to put it on the right. Okay, how does that look, guys? Is the chart making a little bit more sense now? So the hourly volume is up here, but this can prepare us for maybe next week. We're preparing ourselves. We're getting ready. If the volume comes down here naturally, we're ready for it. You can now take it to the next level and place an alert there if you like. Right inside that green box, you can place a line, right click it, add an alert there. So you don't have to be at your charts 24 hours a day. If it comes down there, you'll get alerted. Let's just continue following. So there was barely any volume. Here's London, 3 a.m., 4 a.m., nothing, 5 a.m., nothing, 6 a.m., nothing. 7 started to move, red. They finished off the move at 8 a.m. Okay, that made the low of the day. Then got massive green volume today, coming all the way through. Look at closing right near the high of that hourly candle. But look at where it closed. It closed above our yellow line. What was that yellow line? That was our daily point of interest, last Friday's high. So you can see at 8 a.m., that huge volume closed above Friday's high. I can see the Friday hit the high at noon. This time last Friday, 24 minutes ago, that was the high. We closed above it. And then they gapped it down, red, red, red. It came back up, and look at what we hit the high of the day right there, 43,800. At what time? 9 a.m. Eastern. Unfortunately, Wall Street is closed today, but these markets are still moving. And then it got rejected. Next candle opened ignited red. There wasn't even an attempt for buyers to try and test that high of the day. It was just a big ignited red candle that pushed all the way down, and look at where it came down to. Right into that daily green box right in there. It came right in there. Remember, it didn't just stop at the top. There's 50% the yellow line. It came right to the bottom. So that standard deviation below, that 382 line, and then it wicked right back up above there. It started green again, green, 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 trading right into 50% of this big red candle and closing with some green volume. And then it opened, faked out the buyers above this yellow line. Again, if I ask you, do we see any green volume closing above this yellow line? No. So now the sellers are pushing it back down into our green box. So what we can do now is you can, if you want to mark this area up, see that body that closed right there, that wick, tweezer top high wick, and that wick. Same thing we did with that zone down there, we can do above us, right above the yellow line. Okay, follow what I'm doing here, guys. Please pay attention to this. I don't want to repeat this. Look, neutral box. Okay, do you see how I kind of trapped everything in there, right up to the high? Tweezer top high, it was green, 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 got rejected. Again, this candle was green, 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 right in there and got rejected. Right above that yellow line. We have the same opposite going on, green, right above the purple line. So stretch this again into the future. The volume is below us. So this is now red hourly resistance. So now we're really, really consolidating the volume if we're going to continue to trade this afternoon. Okay, so what I do is red, right? Okay, so we found the green right here, the hourly demand right there. There's our red, same opposite. So it's our 1H hourly supply zone right here. 1H hourly, it's on the hourly supply zone. So if I'm a 5-minute, 10-minute trader, whatever I am, I want to see if volume will in fact close above there, retest it, get rejected there. I can buy, I can sell off this zone depending on what the volume is doing. Okay. Is this starting to make a little bit more sense, guys? Or is this maybe it's confusing you more, even more? But you see now, in between this red zone and this kind of green zone, the volume is just kind of consolidating right here. If I just look at what's left on my black chart, just right there. If I make it neutral, now this is where gold is consolidating. So what could happen this afternoon is it could potentially break bullish out of here and continue to drive maybe close to the high of the day, or maybe it's faked out up there and they drop it. But see how it came down red, red, red again, right into our green box? The buyers are there and bringing it right back up. But we still have this big red volume, and we have 31 minutes to go. So what we can do is we can go into the lower time frames, maybe the 5 minutes, and watch exactly what's going on now. Okay, so you know that this red box was hourly. This is our 50% of, there it is, 830, that big green candle. There's the pullback right into about 50% of it. It went back up, still held, and continued to make that high. Now I can see specifically at 940, 945 was the high of the day. Pushed it down. First retest of the green block was 1045 right before we started the call. We came up, but you see how we're not breaking that hourly supply. Now the market is starting to get a little bit more volatile. Why? Because Donald Trump is speaking right now. Okay, I can see on my TV right behind me. I'm not sure when he started speaking, but I'm sure it had to do with maybe this candle or this candle. Because look at the range now. It's very volatile. Trump is speaking. I don't have the audio on as to what he is saying, but this is the volatility now. Okay, so what we can do now is we can, if you want, you can trade in between here, but it's pretty risky. So what we can do is we can wait for the volume to come back up to this red box and see if it gets rejected. Maybe we sell the red box, or we see if the buyers can close it above here, and then we can flip the red to green, and maybe it creates support, and maybe we're pushing up to here. Okay, that's one option. What about if every time we're coming down here, it's going back up. So it's coming red, red, red in the green box, going back up. Red, red, red in the green box, going back up. So if it comes back down red, 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 do I want to sell the green box? Probably not, because it could continue to go back up. So we need some type of confirmation. Like you see the sellers, they push the low right there. They push the low right there for a new lower low. So they're peeking their head down there, but nothing is really, they're not following through with the volume to close it down there. So if I'm a seller, I would want to maybe see if gold can physically close red below this green box, so that in fact I can flip that green to red. Maybe it comes back up, gets rejected there, and then it starts to shoot back down there. Okay, so those are some options, but then you also have to keep in mind that there could be fake outs of these areas, where it kind of fakes like it's going to go down and it catches a big wick and goes back up. Then we use that as a clue to maybe start buying. But if you want to trade inside here, what I would do is, as a scalper, get your ruler and measure the zone from like right here, that neutral zone. It's a big zone. It's almost 80 pips, 80. So like even just this green candle alone, if you're a scalper, that's sometimes all you need. If you can pick up how it came red, red, red and wicked right out of there, and then they gapped it down, and then you bought that candle, like this candle alone is a pretty big candle, like 40 pips. Why? Due to volatility. So you don't necessarily have to watch this on 1 minute. You can, or sorry, 5. You can go down to the 1 minute and then look at the clue of the 1 minute. Like, know your technicals, know your candles. Look at this is probably when he started. I don't know. This was 1226. It came down red, 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 red. It faked out a lot of sellers and then came right back up green, closed with some bullish volume. That's a bullish pin bar, and then open red, retesting, and kind of broke right there. Like as a scalper, just that candle alone, if you're looking for 10, 15, 20 pips, that is kind of what you're looking for that type of reversal. Like just that candle alone with the body to the wick, that's almost 30 pips, 30 minus a couple pips for your spreads, execution. You can still net 15, 20 pips, maybe just out of that body alone. If you're still in it, you see how it's still creating support and still pushing up. Okay, so you can basically trade anything you want. Just I would follow this template and see how the volume trades. If you're a 15-minute trader, you kind of want to slow it down. Here's our 15-minute candles. Okay, so it slowly came up on the 15 minutes. That's 15, 30, 45 minutes, and then could not break above there. They pushed it right back down. Now we might be coming back up. So again, let's let the volume come to us. We don't need to rush anything. Maybe it's making a second bottom here. You can see how the pattern is being created. It came down with this leg, stopped. It came right back up there. There's our resistance, pivot, our neckline, came back down. This could be the start of that second bottom, that W. It was coming up, but they rejected it back down. So can we still hold this green volume and continue to come up, right up to that? There's the W pattern. And then are we going to break out and follow that arrow? Or they're going to just lower high and keep pushing it down, and then we follow this direction and go sell mode. Okay, so, and then if you're not sure, then just let's wait. Like you don't need to force trades in this unnecessary volatility. Okay, so I'm going to stick with the 5 minutes. What we'll do is side by side, we'll do sorry, it's not, I don't know why it does that, but our analysis, I can flip-flop here. So we did gold. Let's take a look at what gold is doing. Okay, gold, oof. Look at how gold hurts the eyes. Look at it on the 5 minutes. Like, I would avoid gold right now. Maybe we continue to watch US 30. I'll flip back to gold. If you guys see anything, like what I can do is I'll place an alert up here just to let us know if gold is doing anything above here. I'll just place an alert for us. Yeah, I agree. Efren is straight shit. This is garbage. Like, stay away from gold, guys. Like, just as using your trading analysis. Like, what the hell are we trading in here? What are we looking for? Like, this is horrible, okay? This is where you got to look for maybe a different security, something trading a little bit better. But maybe the whole market is going to be like this for a while until Trump is done speaking. Okay, so I'm just going to remove these arrows just so we can get a better look of what's going on. Okay, so let's watch our candles now. As Trump is speaking, US 30 has a nice bullish candle. Look, there's no wick above it, okay? So let's just follow the candle. It closed right at the high. Look at the next candle, how it opened, ignited. So it didn't even pull back. So if I'm looking at 50% of this big bullish candle, what I do is just kind of cut it in half right there. I cut it in half, but I also look to see what happened between these candles. There was a gap down. I can keep it right there. I can keep it right 50% of the gap. I can put it at that wick, but I'm still in this zone, okay? If you're not sure 100% where to put it and you still want to nail 50%, grab your Fibonacci tool, put it from the opening price to the closing price, and then there's no argument. You know exactly where's 50. That 0.5 right there at 43,612, my red line, I bring it down to that white line. Now, in fact, I have exactly 50% of that candle. If I want to do my 5-minute zone, what I do is same shit. Find there, one notch above, one notch below. This is my 5-minute, maybe fair value zone. If we do, in fact, come back in here, maybe I can buy a pullback out of here, okay? So you see how I did that? I got my zone off of that nice big bullish candle, okay? So if it comes back down red, 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 will this green block hold? Let's stretch it into the future. Now I see it opened, ignited. There's no wick, so it had clearance to continue to push. It came up green, 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 right up to our white line. Daily point of interest resistance, last Friday's high, and got rejected. So they pushed it down. That's a lower high in the big red box. If you just look at everything, lower high, lower high, lower high, lower high, that's telling me that there is still sellers in the market that are selling. But as it came back down, it's picking up more green volume and trying again, another attempt. So this candle is going to close in 2 minutes and 40 seconds. A lot can happen in this time. And you see how it's building that double bottom on the 5 minutes right here. Came down, stick with the volume, not the wicks. Coming up here, there's our neckline. It came down, grabbed all of the pending orders. Okay, stick with the volume right there. There's our double bottom. And you can see how we're kind of creating that double. We're trying to break out of here. Can we break out, retest this, and continue going up? We're still in this box here. Will it pull back? Will it do something like this? It came down our supply. Right there, we're building. Will it come back, in fact, red, and shoot off of this box? This will be a higher low, maybe pick up that momentum, break out of there, close above, and then drive. We could possibly see that. Okay, so let's just continue to watch how the market reacts to what's going on. If you guys have any questions, let me know if you got any questions. Thank you, Lucari. Guys, if you can hit the like button, if you guys like what we do here, appreciate it. Mark Andrews is a scrub. Yeah, I don't know how he dropped that ball, but it was cold out. It was, I don't know. I can't make excuses. At that level, that ball was placed right in his hand. He should have caught it. But I'm going for Buffalo Bills, so I was happy that he lost it. But at that professional level, I agree with you. That's a routine catch. Lily, thank you. I appreciate you. Okay, so now we focus on the closing of this candle. It's got 45 seconds to go. The last 30 seconds will really dictate the momentum. So the buyers are still holding. It hasn't really broke. It got rejected multiple times, came back down, but picked up good volume and trying again to test the high of that candle. Okay, could we continue with momentum and go green and break through here? But then we got to watch for maybe a false breakout. Okay, now look at where it's closing. It might close, look, a new high in the candle. Okay, so it's building, it's building, it's building. Let's watch the close. Watch for now gap up candles too. When you got this momentum where it's closing near the high, you might see a green candle gap up and then come back down quickly, fill that gap and continue driving. So here's the close. Oh, okay, so they rejected it right near the close. They're pushing it down. There's the close. Okay, we got a little bit of wick. It opened, if you see, ignited green. It's testing the previous high. So you should see a natural break for a new high, but those wicks are in fact tweezer top exact highs. Okay, so we know what those are. Those are equal highs. The market is not allowing this candle right now to break for a new high. So now it's testing again. Now, there's the break. Okay, so can we fill now this prior wick right here? 43,672. I'm not in a trade yet. I'm just still analyzing right here. Ron, how can we avoid false breakouts? Waiting for candles to close. The easiest, simplest answer I can give you is wait for a candle body to close, to prove to you, to prove. That's what I always say. If I want to buy this move, I want these buyers to prove to me that they can break through all of this red resistance. I don't want to just maybe speculate and take a buy because they could slam it down. And yes, I might, if I miss out on a trade, I understand I might miss out on a trade. But if you continue to trade like that, you're probably going to get in more and more drawdown over time. So my advice for everybody to avoid false breakouts is just wait for the candle to close. That's it. You know, you got to learn some discipline. And don't worry about what could have happened or what should have happened. Because if you look back, if these sellers just sold on that break, they got screwed. They hit their stop loss. Again, if those sellers just sold before that candle closed, they got screwed again. You know, if these buyers just bought up there and then it dropped down like that, they got screwed. Right now, those buyers that just bought that candle right now, yeah, they're in drawdown, guys. And that if they over leverage, drawdown like that might be enough for them to panic. And if this candle flips and loses its ignited open, this is going to be a shooting star candle down. Yeah, here it comes. Shooting star candle down, now coming down to 50%. Look it, that's what I'm saying. Trading with confidence. You understand what I'm saying? Do not take trades without full confirmations. Look at that huge fake out now. They faked out all those buyers and hammered it down. Guys, these are bigger range candles. If you look at the range of this candle, that's 45 pips. Okay, that's enough for someone to panic, drop even 50, 60, 70 pips. Look, it might drop down into our green zone. Let's see if it will drop all the way down in here. And you see how, in fact, it's still trading in our hourly neutral consolidated area. So this is that choppy area we try to avoid at all costs unless you understand and you got the experience to trade in here. It's not for beginners. I'm telling you the truth. You got to have a little bit of experience to trade inside in tight zones. Okay. Does that help, guys? I'm glad that happened, that we could see that, how those tweezer top highs. See how it didn't really break for a new high? That affects the ultimate algorithm above us. It affects the depth of market. When they don't allow for a new higher high, it allows for more offers to flood the market and create more and more and more offerings and more supply up there. That's how you had that big nasty red candle, body candle, come all the way down. Will it come right back up? It still hasn't really broke any depth of market below us. It's still just kind of consolidating with a larger volume based range. Why? Because Donald Trump, or who's speaking right now, yeah, he's still there. Okay. I would avoid trading this afternoon, guys. As you know, as silly as it sounds, I would avoid trading this afternoon. Review, backtest, get ready for Tuesday, Wednesday, Thursday, Friday this week. But today could be very choppy this afternoon. Maybe the market might move after inauguration is over. I don't know when this inauguration is over. Maybe Trump is done speaking. Deb Fischer is speaking right now. I have no idea who she is, but anyone know who Deb Fischer is? I got no idea. I don't know, guys. Did I just see I show speed there? I don't know, guys. I'm not really following this. See, I follow price action. I don't really follow what Donald Trump is saying. I follow price action. I follow, if I'm trading like AMD or Nvidia or Tesla, I follow the CEOs if they're saying anything like in a conference call. I do listen to that. Okay, so look at where we're trading now. Okay, so again, ignited red candle coming back down. So you see, we failed. The buyers failed to break above here. Guys, trading with confidence on YouTube, does that help? You asked me right away, how can we avoid false breakouts? That's one way to avoid them. Wait for candles close, and that was a live example showing you. If we bought up there, we would be definitely in drawdown right now. Or we would have been stopped out, depending on how much you risk. Okay, but it came down right at the top of our green box, didn't really break, came right back up. We still have the red volume. Again, candle came down, trying to go back up, but we have resistance above us. And the US dollar is really, really choppy. I'm just looking on one other monitor I have. US dollar is very choppy. Gold is very, very choppy on the 1 hour. Bitcoin just broke to just below 102,000. Again, might come down to test 100,000. Are you guys excited to look at some stock securities tomorrow with me? We're going to navigate around the markets. We're going to learn about the stock exchange. So we're not just going to be looking at, what we'll be looking at is actually what companies are comprised in US 30? What securities are you guys trading inside NASDAQ? What securities are you trading in the S&P 500? So that's what we're going to be focused on, those individual securities. So we can trade those. We can invest in those. You can trade by buying straight shares of the company. That's what we're going to show you first is buying straight shares of a company, and then we'll get more into options, trading options with those companies. I can't wait, guys. I'm super excited. Dave and I have kind of been doing Forex now and futures for this this April will be 5 years. 5 years. So now we're going to showcase something new. But Dave will continue to do everything in Forex. I'll continue to do Forex too in the London, Tokyo sessions. But when we're in New York going forward, we're going to focus on the stock market, guys, because I believe it's an unbelievable opportunity for everybody to learn, gain knowledge, and also maybe add another financial stream of income to you and your family. We'll teach you guys about passive income through dividends, through covered calls, all of these things that you have the ability to do this, but maybe you're not educated enough, or someone has never taught you, or you never learned about it. The first time I learned about it, I'm like, why didn't I learn this earlier? Why didn't someone teach me this a long time ago? So it is very, very exciting. Efren, everyone talks about how good it is to trade Nvidia. Yeah, Nvidia does have volatility. Like intraday trading, Efren, or day trading, I like to find volatile securities. Like if we're watching Apple, doesn't really move with volatility. So like MicroStrategy, holy shit, I told you guys this months ago. It's a scalper's paradise. Like it follows Bitcoin. So if you see Bitcoin was trading just an hour ago at 107,000, it just dropped to 101. If I was watching MicroStrategy, it could have just dropped 10, 15, 20, $30 a share. So if I'm just looking for those small increment moves, $1, $2, $3, I want volatile securities. So that's what we want to look for. But if you're more of a swing trader, if you're more of an investor, stick with those household names like Apple, those ones that are just steady, don't really have volatility. Tesla has volatility. If you like Tesla, it moves like a couple percent per day. And then just figure out what security you like, what name you like, what name you're passionate about, what name that you like. If you ask me right now anything about MicroStrategy, I don't even need to look at the charts because I look at it so much. I know, those demand levels, those daily points of interest, I know exactly in my head. If you tell me right now it's trading at $400, I know if it drops down to 390, 380, I know because I've been trading it every single day for the past few months. I know what levels to look at. Like it's just, you guys it's going to become second nature. It's going to become routine with you. Sometimes you're not even going to have to look at a chart. Same with gold, same with oil, same with Dow Jones. If you understand your higher time frame levels, you understand like the numbers. You'll know. Why did crypto just dump? Donald Trump effect. Maybe, who knows? Who knows? Maybe he says something. I don't know. Trump releasing a Trump coin. I don't know about that, guys. Be careful trading that, okay? Because 80% is owned by institutions, only 20% to the retail. If they dump that thing, I've never seen a president a couple days before do a meme coin or a pump and dump. I've never seen that before. I was in awe when I saw that. But don't ever buy the highs, because if that shit dumps, you're in big trouble. There's even a Melania coin I just read. Wow. Yeah, like to me, that's gambling. That's not trading. Okay, you're in a gambling. Like if you want to gamble, you can gamble that, but those are not real investments. Is there anything behind those? Any intrinsic value? I don't. If I'm going to trade those, I might put just a tiny portion in there, a couple dollars, and just see what happens for fun. But I stick to more household names that I can, if I'm trading it, they're not as crazy, as volatile as. I stay away from gambling in the markets, guys. But they're fun. Those things can be fun. Okay, so what's going on? US 30 is still building. It came down. It wicked right back up. It came down. We got a higher low wick. It came down again. We got a higher low wick. So the buyers are still present. They're still there accumulating. But we need to really break through some of this resistance. And some traders will start to initiate a buying position right now just because they see that it is creating a higher low, a higher low, a higher low, hasn't really broken support. So some traders are thinking this is a good situation, a good time to buy right now. But still, I don't even see a green candle closing above this resistance yet. Okay, so if you're taking a buy, you're speculating. No matter how good these technicals look down here, you're still basically speculating. So if you're speculating a trade, I, for example, would not go with a big order, because if you're wrong on that speculation, you're going to go in drawdown. And then if you go over leveraged up here too much, you're going to panic and you're going to sell. Or so if you're buying and you're not too sure, start a very small speculated position, something very small. So if it retraces on you, and maybe you can hold it and draw down a little bit, but you're not going to suffer a massive loss. You're not giving up your daily gains. You're not giving up last week's gains. You're just a small, you're getting your feet wet. It's to see what's going on up here, if that's what you choose to do. And then if you get the added confirmations while you're in that feeler trade, then you can also add to that position with more confluence, more confidence in the trade, and more conviction. But right now, okay, we got a hammer candle building. We have 90 seconds to go. So how, in fact, this is a pretty strong candle. So it opened, it came down red, red, red. It's got a higher low, higher low. Now we came back to where we opened on that candle, and now we're trading right at the high of the candle, and it just created a new high. So we've got positive volume. But let's see, in fact, if it will close with this momentum, or will it get pushed down again? And where will it close? Will it close near these wicks? Will it close right here? We'll know in the next 60 seconds. Okay. What I tend to focus on is the last 30 seconds. The last 30 seconds shows the momentum. Okay. Now you see the buyers are pushing it right back up to those tweezer top highs. Can they in fact now break it out with this candle, or is it going to get rejected again? So let's see. Will it close above this red line here? Will it attempt to come up to the top of the supply box? Okay. Then if it's a big green candle, we've got to figure out where 50% of it is, just in case we get a pullback buy. Okay. So right now, in fact, very bullish. If you're in buys, it's looking good. If you're selling right now, we got to see if it gets rejected right here. If you're on the sidelines, we're still watching. So it cut through that resistance. It made a new higher high through here. Very bullish volume. Okay, let's see where it will close now. Here's the close. 50%, you see how it's right there? Right there, that red line. I don't even need to change it. That's about 50% right there. What I'll do is I'll change the box color from red to green, because we might get some support in this box now. See how they gapped it up? Red, red, red. Right now we're trading to about 50%, exactly where that tweezer top high wick was, that red line. I didn't even change it. See, now we're going to see if this red line will hold as support. Right now, it just got a tiny wick, but we still have heavy red volume. Will the buyers be able to flip this entire red volume and turn it back into a hammer, and then we drive? Or is the sellers going to push it all the way back down here? Okay, so this is the battle. There was a nice big green candle, and the red team right now, the sellers, are answering it, coming right back down. And they started that candle right away. They gapped it up, bearish ignited red, dropping it. So there kind of wasn't even an opportunity to look for a buy on this candle. Okay, so they pushed it below 50% of the volume, and they came all the way back down to the bottom of our green box. Will it hold right here? Now, that was our daily point of interest of resistance, but we should flip this now to support. Our daily point of interest of support of last Friday's high. Is last Friday's high, in fact, going to act as support? Yeah, if you're trading with different brokers or platforms, so you might see that the market is closed. Trade Locker is saying that the market is closed. That's another thing. You guys got to, in fact, know with your broker, your security, if there's early closing, things like that. Okay. But you see, okay, to me it looks like they attempted to break this nice, look how visual that double bottom is, that W, but we have not got that move yet. So it's coming down red, red, red. where will the buyers step in if in fact they do? This might be a heavy red candle coming down, and we're going into 1 p.m. We're about 2.5 minutes away from a new hourly candle. Okay, so maybe next hour this might come down red. It might change and go back up. So let's just see now how it's interacting, how it's trading within this zone right here. Okay, I believe Donald Trump is walking away now. Okay, and if Donald Trump is walking away, we're getting a new hourly candle and he's walking away. So this is where the market might, in fact, this bullishness was maybe because Trump was there, and now that he's walking away and we're going a new hourly candle, you see how momentum switches and the market now is selling off. Okay, so if you were a buyer at any point in here, you traded right into that supply. That's sometimes when I'm closing out trades. If I'm in a buy, I want to close my trade where there's resistance, where there's supply. If I'm selling, I want to sell into support or demand. And that's where I start to manage my trade. You don't need to close your entire position, but you can start to close a portion. You can start to definitely move your stop loss and reduce your risk. Absolutely, you can do that. Yep. Okay, so Trump is walking away. Who's that? Biden. Okay, so if this candle now closes back below here, it is an ignited bearish engulfing candle that might have momentum to continue to push down. And in this box, again, I'll flip it red because then it still represented supply. See how that green candle came through there? It was strong, but this red candle, 5 minutes before 1 p.m. and Donald Trump walking away, kind of maybe engulfed it right back down. Okay, so here we're almost 30 seconds away from this candle closing, and we're going into the new hour. So we'll see. Will we flip this back red, and the momentum might be to sell? It might come back up green, 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 and trade into the red box and get rejected and go back down. And check your spreads too. If you're looking to trade, check your spreads. Maybe your broker is approaching closing, or I don't know who you guys trade with, but check spreads, check volatility, check all that. Here's the close. It looks like it's going to close physically below here, so I'm already doing green to red. Okay, so there's the close. Look at the gapped it down. Look at the gap down. Okay, look at where this red candle closed, and they just gapped it down. So let's see if it will come up green, 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 fill that gap, and then a wick pushes this down. Then with that momentum, you might be able to take out this low, this low, this low, and come all the way back down into this green box. See how it's just sitting there? Or it's just green ignited? Will it push and fill that opening gap right there? See, it just didn't even fill the gap yet, and then they just start to drop it red. But this is where we had all those previous buyers, right here, and right here. Will they step back in, or are they going to take out that low? This might be, again, an opportunity waiting to buy in this green box if it comes down there. I'm patiently waiting for it to come down here. But again, I don't want to force any trades because it's just too choppy right now. The volume is dying off. Yeah, oh man, I hope that didn't happen. You guys think your broker just closed because MT5 froze? Yeah, you got to be very, very careful, guys. Some of you guys saying your platforms are closing, so maybe it's safe to stay out of trades this afternoon. And then we resume with regular trading volume tomorrow. Don't force in this shitty trading range. Okay, if I was not trading with you guys, I would have walked away a while ago. This is not good trading, guys. Markets are closed for a majority of you guys. There's nothing to see or do here. I hope that everyone understands what I'm saying. To walk away. I'm not trying to be rude or anything, but I'm telling you exactly what I would be doing in a situation like this if I'm trading this. If we look at gold, remember we started with gold? Look at gold. Gold is horrible, guys. Take the afternoon off, go grab some lunch, and we resume tomorrow. Look at gold. Gold is If we were looking at gold that afternoon, I don't think we would have taken a trade. I wouldn't have traded this range. Okay. We were looking at US 30. US 30 is stuck in here. I would, guys, you know, maybe what we can do is we can kind of prepare ourselves for tomorrow. What we're going to do is tomorrow we're going to be taking a look at some of these securities. Okay, so we'll be looking at maybe MicroStrategy tomorrow, maybe Nvidia will do an analysis. AMD, I really want to look at AMD, guys, with you guys. I think AMD is at some good levels. This is Advanced Micro Devices. Maybe if you want to read up a little bit about this company, we're going to get started with this. I have a webinar also created for this one as well. So Advanced Micro Devices, right now at the close of January 17, Friday, it closed at $121.46 a share. On Friday, it was up almost 2.5%. After hours, very light volume. You can see over here, it was trading around $120. Okay, that was kind of that resistance. It broke out of there, came up to 124, kind of consolidating right in the 120s. So what I would be looking at is kind of the last 6 months. Like last 6 months, it's down 32%. Okay. I'm looking for good buys at discount. Look at where buyers bought previous. It was trading at $170 plus. Now we can buy this company at $120. Maybe it might drop down further, but I would rather buy a solid company that is 32% discount from buying the highs. It's just like when we go shopping. You know, if you're going shopping and you're buying your nice clothes and you see that there's a 50% deal, a 30% deal, you're probably going to buy it more. So why don't we use that same psychology with good billion, trillion dollar corporations that trade in the stock market? And if you want to know what Advanced Micro Devices does, they create chips for computers. So they are similar to Nvidia. And with the market rally, the last few, what I look at is like when the market was rallying, AMD didn't really rally. Okay, so that's another clue what I look at. When the market was rallying the last few weeks, where NASDAQ and Dow Jones and everything was going sky high, AMD was just chilling. It wasn't really moving. So now I think that maybe smart money might be coming in, buying this at a discount, and then drive this thing back up to 130s. Maybe we see 140. Who knows? Maybe psychological 150. Maybe in a few months, years, we might be testing to break those highs again. So are chips in demand? Absolutely they are. Is technology advancing? Absolutely it is. Quantum computing, AI, everything. So, but just take it carefully. If we look at the last month, it's still down 4%, and then our intraday. But we'll do a nice analysis tomorrow. We'll take a look at this security, and we're going to start to have some more fun. Okay. Everybody, guys, this is our free Telegram channel right over here. Join us. It's a link. It's pinned at the top of the YouTube for you guys. If you want to join it, we would appreciate you guys joining this. You can see everything that we do here. Guys, if you want to visit us on Instagram, give us a like, give us a follow, stocksnipertrading.com. If you want to follow myself and Dave is Dave Analysis. I'm Sniper Ronnie. I think it's _FX. It's got a check mark, okay, because I've been a lot of scams and things like that. I got my Facebook account hacked and I lost that. My old Instagram account, I got hacked. So with that blue check mark, you know it's me. I would not, SST and myself and Dave are not messaging you guys unless we know you. We're not selling you guys anything. Don't fall for any scams and things like that. Same within our Discord, guys. If you guys see someone messaging you in our Discord from Stock Sniper Trading, look, you might miss it. There's sniper spelled with 2 I's. There might be an underscore, but it's those scam artists selling you stuff. We don't do that. You guys know us. But I appreciate you guys. Guys, let's call it a session right now. I was looking to go a little longer, but there's not a point to doing this. We'll be back tomorrow. Tomorrow volume will be trading back to normal, regular hours. What can we expect tomorrow, Tuesday? Let's see. Going to start with some news in Europe. You got some British news and a lot of Canadian news tomorrow. But I believe when Wall Street opens up, we're going to have fun. So the plan is, guys, post New York tomorrow, like around 11 a.m., 10:30, 11. The reason why I'm doing this is I just want us to get a feel of how these securities are moving, because Wall Street is very volatile. So I want to kind of just lead into Wall Street once we understand what we're looking at. So I want to briefly introduce some of the companies. What we can do is we can look at Nvidia, AMD, we can look at Tesla. We can see how they reacted at the Wall Street market open, maybe start to analyze, answer questions, start to figure out the highs and lows of Wall Street, all of these things. And then slowly, when we get more and more and more education as to what we're doing, then we'll do some live trading with you guys in Wall Street, right when Wall Street opens up with these bigger names. So we have a whole lifetime to do this together, guys. All I'm asking for you guys is just please to continue learning, practice proper risk management. Don't over leverage, don't over trade. When you hit your daily goal, listen to Uncle Ronnie telling you to get out of these markets, because these markets can overtake you. And then it can become like you're a gambler, like it's a casino. Believe me, I went through that phase where I was gambling in these markets every day, and then I wasn't trading. I was just gambling, and I lost all my money at that time. I'm telling you the honest God truth. If you ask me when I lost the majority of all of my money, it was when I started to learn how to trade, because I had no idea what I was doing. I thought you could get rich quick, and just gambling, guys. Keep losing, keep gambling, keep losing, keep gambling. No structure, no plan, no routine, nothing, no risk management. Like everything you can think of to lose money, I was doing, until I started to figure out there's more to trading than just hitting a buying and sell button. You have to be very patient, disciplined. Like today, how we're walking away from these charts right now. Like that takes a little bit of maturity to do that. And I love how some of you guys are saying, Ron, let's walk away right now. There's no point. I love that, because other times when we started, everyone's saying, Ron, where's the next trade? Where are we buying? You got to understand that there's no opportunity right now. We walk away. Like right there, Paul, revenge trading is your biggest problem. I understand that. It's probably the biggest problem for a lot of traders. But if we walk away right now, we're not even allowing ourselves an attempt to revenge trade, because we're not putting ourselves in a situation to take a loss. So this is where we can start to focus on revenge trading, walking away from a market when the volume is really shitty. Someone asked me earlier, Ron, how do we avoid fake outs? And I said right there, we wait for candle bodies to close, because it was this candle right here at 1240 when he asked me. If you were buying that, you got faked out and it dropped 40, 50 pips down. So just wait for candle bodies close. And in this green candle at 1250 did close really strong, but look at the clue. It didn't give us confirmation for a buy. They gapped it up, guys. Pay attention to candles, technicals. Look at where it closed. They gapped it up. This is the start of a bearish engulfing candle. It didn't just gap up and go up green and take out that wick. It gapped up red, ignited red, and started to push down. Red, 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 red. I gave it an opportunity to pick up a support or pick up a wick right there at that red line, about 50% of this level, and it didn't. And it just kept going down red, red, red. I gave it an opportunity to grab maybe a wick right here at this daily point of interest resistance white line, if you can see it right here, and it continued to drop all the way where it engulfed this entire green candle, came, traded into these wicks. It came back up green, 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 closed, majority red. Figure out where 50% of that red volume is, drop that red line, and then as this thing, look at, they gapped it down, and the candle came up green, green, green. It filled that gap, and then they continued to drop it right back down, spin top, and then now we're still selling. So you see how there was no opportunity to even buy, even when you got a positive closing candle. Just because you got a positive closing candle, that doesn't give you the right to just take a buy. You got to understand context of these candles. Each candle tells a story. Each high, low, open, close tells you everything. Then there's clues alongside. There's gap ups, there's gap downs. There's so many clues if you're a technical price action trader that you have to learn, guys. I'm telling you, it will change the way you look at securities. It will change your whole aspect of trading. I zoom in. When I'm trading 1 minute candles, I've done my top down analysis, so it allows me to really zoom in on the charts. And I'm watching everything, but that scalping is not for everybody. 1 minute trading is not for everybody. You figure out what's best for you and backtest, learn from your mistakes, make sure you're doing journaling, make sure you're respecting your risk management, understand how much you're risking per day and it's not over leveraging. If you hit your daily goals, there's snipers in our group that now thankfully are hitting daily goals, weekly goals. It took them time, took them multiple years to figure it out, but I'm proud to say that we do have snipers in our group, in our community, that are starting to figure this out, and it makes us very, very happy that that's why we do this. But it takes time, guys. So don't think that you're going to learn this overnight or in 1 week or a month. It takes years and years and years just to overcome your emotions in the markets, to overcome all those bad habits we do as traders. And it takes a while to understand this, but one thing that keeps me going is treat this like it's a business and it's not a casino. Okay, you want to go to the casino? Go to your local casino, Vegas, or your local casino, play the slot machines, play poker, play blackjack, baccarat, play what you need to play. I go there all the time too. I have fun, but I know that those are fun nights. If you guys ever want to go to casino, I will go with you. We'll have some fun. But when it comes to the markets, this is business. We take shit serious here. This is work for some of us, okay? So we don't play games here. So I hope you guys understand that I'm treating this as a business. I'm walking away right now. There's no volume to be trading. We know that the markets are closed early. Let's just go grab a snack, relax, eat, drink, and we will be back tomorrow, guys. So please, guys, hit the like on YouTube. Subscribe to our free Telegram channel. It's pinned at the top. Subscribe to our channel. I don't want to have to beg you guys because we are going to be doing a lot of new things in the stock and option market, and I don't want you guys miss out because this is the time. We're starting from the beginning, so don't miss out. And you guys on Zoom too. Love you guys. Enjoy the rest of your day. I had fun today. We'll continue this tomorrow, 10:30, 11 a.m. Eastern, and something new, guys. We'll be looking at the stock markets tomorrow, okay, with individual stock securities. I will be trading them with you guys. With these type of securities, sometimes I don't just scalp for just sometimes I do, but sometimes I look for a nice position. So if I tell you guys I'm adding a position, it might be an intraday hold, it might be a multi-day hold, and then I can continue reviewing it with you guys. Like AMD, I'm telling you, I might be looking to start an initial position on AMD. I might be looking for an intraday move. Who knows? We'll see how it plays out. But I take it day by day, security by security, candle by candle. But there is some good securities out there, guys. So have a great day. God bless everyone. Enjoy your Monday. I hope that everybody has a fantastic week in the markets this week. And let's have some fun closing out January and going into February, guys. And hopefully 2025 is going to be your year, guys. I can see right now a lot of you guys are doing really well to start the year. Let's not do anything silly to jeopardize that. So just continue to stay focused, continue to stay dialed in, and you guys got this, okay? And congratulations to everybody. Beating the prop firms, passing prop firms, getting first payouts. Some of you guys are trading your own live money, not funded, and you guys are doing well. Some of you guys are getting your first ever payouts, all of these things. So whatever milestone you're reaching, let's continue this. Okay, guys? Have a great day. I'm going to go back to listen to what Trump was saying. Just want to hear what he says. It's good to know exactly what the president of the free world is saying, because I missed it. I had it on the background, but I didn't listen to what he was saying. I actually want to listen to it because who knows, maybe he gives some clues as to what's going to happen in the markets in the near term. Okay, and maybe sectors too. What is he talking about? Drill baby drill? Is it going to drill baby drill? Then we got to look at the oil sector, some securities there, all of these things. Is it going to stimulate the auto manufacturing in the United States? Then we go to Detroit, the big three: Ford, GM, Stellantis. Ford is trading at some good under $10 a share. So, you know, it might be opportunity there depending on what he does. Okay. But let's all have a great day, and we'll see you guys tomorrow. Thank you, guys. Enjoy the rest of your day. God bless. Please, guys, hit the like, subscribe, notifications, and we'll see you guys tomorrow. Thanks. You guys on Zoom, enjoy the rest of your day.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.